All right, so it's Sunday evening, just before the start of the Asian session. It's 20 past 8 at night, my time, on the 3rd of April. And in about 3 hours' time, the Asian session for next week will begin, which will be Monday morning Asian time, or Tokyo time, should I say. Let's have a look at what we've got. Well, I've got the three currencies on the screen: the euro against the US dollar, pound against US dollar, Australian dollar against US dollar. And let's start with the euro. So, if you remember, we took a couple of trades on this during the last stages of Friday last week. One was over here, a long position off this Fibonacci, which is the 50% fib, which failed, that one over there, which eventually failed. Took a long time, about 5 or 6 hours, but eventually we fell through this longer term fib. If I just expand that out, that's the longer term 50% fib over here, this line. And we just fell through there a bit and then bounced off this 61.8% fib, and we're currently long the euro at the moment. So now I don't know what's going to happen. We lost two trades on this last Friday, but they were small trades, 20%, 20 pip stop losses. And technically, once again, we're still in a long trade. Now, if you look at back over this last period of, I don't know, I suppose that's a day or a day and a half, even though we've dipped down slightly from this level here down to where we are at the moment, it's been pretty slow and pretty much sideways, really, in reality. Sort of a ledge there for a while, then a small ledge, and that's where we are at the moment. So we'll have to see what happens. Anything could happen with the euro because of the political situation which is ongoing in Ukraine. But if you have a look, if I just zoom right out, you can see we're still technically in a long market, above that 200 moving average, above the support lines at the Fibonacci levels, and I could even put a horizontal line in there as well. At the tops of these areas here, you can see there it was resistance, and then resistance all the way along there to where we are at the moment, which is now become a support level. We actually haven't closed beneath that line at all, even though there have been several attempts to do so. So we're long on the euro. We've got a tight stop loss on there. The signals have gone out to trading clan members and subscribers, so you'll know what's been going on. So even though we had a couple of losses, we had those losses and then one on the pound as well, I think. So three losses of about 20 to 25 pips each, generally around 20 pips each. And that's nothing to worry about. You've got to be prepared to take small losses in trading, particularly when we've got tricky trading conditions as we've had over the last, number of weeks now with Ukraine going on. So, and that's not a problem at all. As long as you keep your losses small, cut them when they go against you, you'll always have opportunity to make those up in one quick trade. And those small losses, even though they tend to be frustrating and annoying and sometimes scary for new traders, they're nothing to worry about at all. And I've just sent out a video, in fact, a couple of hours ago, which you should and must watch. If you're watching this on YouTube, you'll see the video I sent out is the one just before this. And I talk about some of these things in that video. So it's very important that you watch it and that you understand that this is nothing to worry about. So strategy on the euro, we'll have to see what happens. If we break through this area in the Asian session, which is probably when it will happen if it does, then we're going to go down to somewhere down here. These are the, there's these two lines in between this sort of surrounding this green gray area are the 278.6% fibs. We'll have broken beneath the 200 moving average, but the 78.6% fib lines are always places where you can be guaranteed a good shot at a reversal in direction. So we'll be keeping an eye on those if we don't manage to rally up from where we are at the moment. It's touch and go at the moment. It's really not it's not clear what's going to happen, and there hasn't been much of a bounce since we took that trade. It's been very much sideways and no real determination or indication from the market that it's going to move up aggressively. So we'll have to keep an eye on the euro. I'd say 50-50, the chances of winning this trade. But, you know, you never know. The market always surprises one. The pound, we lost a long trade on this one as well. And remember I said we'd wait to get down to the 78.6% fib. We took a trade anyway after that reversal there. This piercing pattern off that fib is pretty classic reversal. Actually, that's not the one I'm talking about, but yes. So what had happened, I'm just trying to think back now. I could do a bar replay on this. I'm not sure if you can do it on Oranda charts. But anyway, we broke down through there and we got stopped out somewhere here. There was actually a reversal with this piercing pattern. That would have been a good place to go long, even though it hasn't really done very much. So I think we can just leave the pound alone for the moment. Once again, I'll be looking at the 78.6% fib. We are in a downtrend on the pound. We're beneath the 200-period moving average. So any buying situation that goes on, any buying trades that we take will be counter-trend trades, which make them more dangerous, more difficult, more risky from a probability point of view. And that's why I always go with a very small position with tight stops on counter-trend trades. So we'll just keep an eye on that. I've got no real idea of what the pound's likely to do. I was just thinking about this the other day. Overall, if we switch to the, just out of interest, switch to the day chart, we could even look at the weekly chart. The pound's incredibly oversold. For those who've been trading a long time, if there are any of you, okay, this is not happening. I don't know why it's paused. Anyway, let me just pause this and fix these charts. Something's happened here. I'll be back in a second. All right, so we're back. The internet has just gone a little weird. I'm not sure if it's this Apple computer. One of the problems with Apple computers is that you can't put any extra memory into them, RAM, and I'm running quite a lot of RAM heavy applications at the moment, and the video software is part of the problem. Anyway, if you look at the euro, this is the day chart, and this isn't even the beginning of it really. You can see we're pretty oversold on the euro. Now, it's not surprising, this last dip down recently, but in fact, if we have a look at the week chart, if it'll allow us, you'll see that we're generally very oversold on the euro. And for those, as I was trying to say earlier, for those of you who'll remember, going back quite a long time, the euro was, there we go, here's the weekly chart. So there we are right now. We're right at the bottom of a very long-term range. Where we are at the moment. This is just a longer term view. It doesn't affect our day trading at all, but you can see this level about where we are right now is at the bottom of this range. And if my very slow and annoying internet will allow me, you'll notice that the top of the range of this euro against the US dollar going, so we're back to 2000, it's not refreshing unfortunately, but going back to 2014, so that's almost 8 years ago, we're just starting to get some action. I think we're about 1.5 was the high, and where the euro started just above, around about parity. In fact, it started about 0.96 when the euro was first launched, thereabouts in any case. perhaps even slightly less. All right, so this isn't going to serve us well. Anyway, the point is we're at the bottom of the range. We're right down near the bottom. There we go. So there's 1.6, and that's kind of the top of the range. And we're at the bottom. So looking at it in the very long term, euro is probably a good investment if you were a long-term investing sort of trader. But that's not what we do here. But it's just interesting. All right, let's go back to the hourly chart. Can't wait for this any longer. And I might have to pause it again. We're running into some speed wobbles at the moment. All right, so we're back. This is all quite frustrating, really. So anyway, back to the hourly chart. And so that's the situation, as I explained earlier. We're at the support levels, this horizontal line, the 61.8% fibs, and the 200 period moving average. So it's looking precarious, very 50-50. Don't know what's going to happen there. The pound we looked at earlier. The pound's also very oversold. The pound has been above $2 to the pound at some stage in the not too distant past. I'm not going to even dare try and get onto the daily and weekly charts right now. So there we are in the pound. I explained this earlier. We sort of hit the 61.8. Are we going to stay above it? I don't know. It's possibly worth, if you really want to. It's not something I'm going to do, but just throwing it out as an option. Even though we're in downtrend, we are at support, not convincingly, because we've closed beneath it once or twice already, and we've got much more interesting levels beneath us at this 78.6 in particular, and perhaps down at the bottom of this last move down, this range move down. So, but if you don't mind taking a small position at the current price, you're more than welcome. The Australian dollar, well, this is a boring one. I've traded the Australian dollar for a very long time. I've never been in such a lengthy period of nothing happening, as far as I can remember, at least not in the last number of years. But we can go all the way back to the 22nd of March. So that's 8-9 days plus another 3. It's almost 2 weeks, really, that we've been moving nowhere on the Australian dollar versus the American dollar. Now, as opposed to the other two currencies, where I mentioned they're both in the long term, both very oversold, the Australian dollar is actually very overbought. And the average price, the normal sort of range that it likes to settle in the longer term, is way down here. That's 0.71, but actually lower than that, about 0.65, which is beneath the bottom of this chart. Once again, I don't want to switch to the daily charts in case we get locked out again by either the RAM on the Mac or the slow internet. I don't know what's going on. But we're still in this range. Nothing to report on on this Aussie dollar. We're still in a short position. Those are the highs, recent highs, but also it's the highest it's been in quite a long time. If you look back on the charts, we're at a pretty much a high point. We're still beneath that, but we're not making any progress downwards either. And we've got this little trend line that I drew in last week, just moving up from there to there. Very short-term trend line in terms of the bigger picture of things. Nothing much happening. Beneath us, well, we've got this support line, which has been holding the whole time. On how many occasions now? 1, 2, 3, 4, 5, 6 times. We've been holding above that support. That's the 38% fib, 38.2. And we've been holding below this resistance line, which is the top of the move. How many times? 1, 2, 3, 4, at least 4 times. But here's something interesting. We're making arguably lower highs each time in this last little period here. So even though we've been trying to rally back up to resistance, we've been making lower highs. So if anything, this one looks the most favorable for a move down. compared to the long positions that we have, or the long position we have on the euro and the potential long position on the pound. So we're in opposite directions on the Aussie compared to the euro against the US dollar. And I don't really like to trade currencies in opposite directions against the same base currency, which is the dollar. So we're long on the euro, short on the Aussie. Basically, it's saying the dollar's going to weaken, the other one's the dollar's going to strengthen. So, but it sometimes happens that you do get divergence in currencies against the dollar. So, and that's it really. Nothing much to talk about. I imagine, I keep on saying this week after week, that the day after day, really, not week after week. It's only been, it's been almost 2 weeks, but that the Australian dollar will move out of this range at some stage, and it might be this coming week. And when I say move out of the range, either it's going to bust up through the top or it's going to bust out down through the bottom. Whichever one happens will determine whether we make some profit on that and get going on it, or if we're going to be languishing. One more interesting thing before I sign off, look at the Bollinger Bands. Top Bollinger Band, this blue one. Bottom Bollinger Band, this blue one here. You can see they're very close together. Look at the distance between the Bollinger Bands all this way along here. In fact, let's go back a long way. Go back to February. Look at the space between the Bollinger Bands all this time. There it became pretty wide. Now look at the space between the Bollinger Bands, very close. That's called a Bollinger Band squeeze, which means that we're likely at any time pretty soon to have a breakout out of this range. And the tightening Bollinger Bands is indication of that. So we're heading for a breakout anytime soon. Don't know when, maybe tomorrow, maybe sometime during the week. Almost certainly sometime during the week. These Bollinger Bands are way too close together. They're not going to stay like that. Whether it'll be up or down, anyone's guess. So, bit of a dodgy start to the week, really. Nothing very clear on anything. Hopefully we're in the right direction in one of these currencies, and of course I'll update as we go along. For members, every single trade you'll receive from me by email and alert, private WhatsApp group and Twitter and so on. And for those who are just watching from the outside, the visitors, I appreciate you visiting. Thank you very much. It's wonderful to have you along, and you can catch glimmers of what's going on the YouTube channel and some of the trades that I put on Twitter. Last thing I want to say quickly before I go is I've just put a book list up on the members site. Go and have a look at that. These are essential books that I have used over a very long time. They're still in print. They're fantastic books, best trading books I've ever read, and I've read an awful lot of them. I put my best selection up there for you to have a look at. I suggest you get hold of some of them. They're absolutely brilliant. For those of you who are not members or subscribers, there is a link on thetradingclan.com, and you can go there and click on that link, and it'll take you straight to the bookstore. And disclaimer here, yes, it's an Amazon bookstore, selection of books. I bought all the books myself from Amazon. I have them in my own library. Bought them from Amazon. Some of them you can only get on Amazon. But the disclaimer is, yes, I do get a small commission for those books. And what I use that commission for is to pay for the software that I use to make videos, to host my website, and all the other bits and pieces of software that I use to produce what I do. It's not very much, it's a little bit, but it covers a few of the costs that I have in running the trading clan. So there you go, that's the books. And if you're going to buy books, which you should, I'd rather you buy them through me than anywhere else, because I can use those few pennies to pay for some costs. So thanks very much. Good luck for next week, and I'll update if there's anything a little bit later on, anything at all that's of interest. If I'm still awake, I will update the subscribers to the Trading Clan by WhatsApp, and by possibly I'll put something up on Twitter as well. So I'll speak to you very soon. If not later on, then tomorrow, beginning of the European session.